Hello, good evening. Welcome to Property Zone Live, and I'm Sean Lee again here. So today the topic will be about the three things we need to know about the market nowadays. So we'll be talking about overseas, and then talking about Malaysia and how would it affect our market as a whole. So before I proceed, I just want to give you a reminder again. Tonight, 9:30, okay, 9:30 Malaysian time, and we are waiting for the CPI result from US. Why CPI is so important? Because they will determine, this will give us a very important clue of what the next move going to be for the Federal Reserve. Is that they're going to increase the interest rate as much as possible, or they might slow down their pace a little bit. It will be very much dependent on the result of CPI tonight. So if you are paying attention, don't forget 9:30 is the news. All right. So I also have actually did up a slide and share some what is really going on and the things you should not miss. Without further ado, let me just bring my slide up and share with every one of you. Okay. No, the things I want to share with you, probably I will break down in either regions or break down by the countries. Okay, I will start with China, then followed by UK, US. Of course, I will miss out the Malaysia. And you guys know next week, big things happening in Malaysia and what could be the things we're going to look out for. All right. First of all, in China, as you know, the president Xi Jinping has actually re-elected for the third term, unprecedented third term to be the chairman in the Chinese Communist Party. And inside there, one thing is a bit different that we have never seen before is normally in China, they pay very much respect to either the older or the former leader in the country. But this time, during the congress, during the meeting, a former Chinese leader, Hu Jintao, has been escorted out in the public eyes. I don't think this thing is done by accident, but according to another analyst, this time is actually done with purpose. President Xi is sending out a message that he is in control of everything. Wherever the previous influence from the previous leader will have no place in his ruling. Follow this, market in Hong Kong, Shanghai, Shenzhen crash. All right. As you can see, Hang Seng Index slid to 13 years low on Monday, bringing the year loss to 35%. And what are the main reason about that is that the risk of potential mistake into a major shock to the economy. What it means that what China is going through now is that one person is actually holding too much power. There is lack of check and balance in the country. If there is a major shift or major error or major mistake in the policy makings, no one there to raise their voice. So this is the one of concern that a lot of foreign investors are actually concerned about. Excuse me. And second thing would be zero COVID policy. China was the first one to undergo COVID lockdown, but even until today, they have still insisted on the zero COVID policy. So with this, the economic growth, the market activities has been severely affected. So with President Xi Jinping being re-elected again, there is no sign of easing pandemic restrictions. So in this case, it also means that China will not foresee to open their door to the world yet at the usual pace. So this another thing is concerning. So of course, on the UK front, if you have paid attention to one of the very interesting tweet, a guy posted, he say, my son has witnessed three prime minister in UK, and he's less than 2 months old. So for 2 months old baby to witness the three changes in new prime minister in UK, three prime minister in UK history, is actually a political instability. All right, first Boris Johnson was out, succeeded by Liz Truss. Okay, and after that, Rishi Sunak has become the first Britain prime minister with the Indian blood. Okay, so throughout the past 2 to 3 months, okay, there's a lot of shift, there's a lot of U-turn policy in terms of financial, in terms of physical policy from UK. It caused a haywire in their currency, and you can see the drastic volatile movement in UK pound. And what is worse is that now the European mostly are behind Ukraine in against the conflict with Russia. But at this moment, some of the country are experiencing Ukraine fatigue in a sense that first, because of the war, the price of natural gas has escalated. A lot of normal people and also the business are suffering in Europe, UK, because of the high utility bills. Some of the people who are paying 5 to 6 times the normal cost for their house electricity or for business utility bills. So cost is going up tremendously. And even US seem to be advised, the president of Ukraine, to actually have a talk with Russia. But at the moment, the president of Ukraine, Zelensky, actually said that no negotiation is going to happen unless Russian President Putin step down. So it's stand quite firm on his situation. What makes it worse is that the cold is coming, and a lot of analysts forecast that the cold of this year is going to be extreme. So with bad weather, cold weather is coming colder than usual time, with escalating natural gas prices, energy bill. Europe, UK is going through a tough time. Okay, let's skip this one. Now, US, last week, US, as expected, announced the fourth consecutive 75 basis point interest rate hike. It means that within this year, okay, it has gone up 6 times of interest hike. During the COVID lockdown at the end of last year, we still remember, the US interest rate was between 0 to 0.25%. This is during their QE time. But fast forward, you're looking starting this year, 6 times interest rate, and out of the 6 times, 4 times was 0.75%. So at the moment, the US interest rate or the federal Fed funds rate has gone up to between 3.75 to 4.25%. So they will have another round meeting end of the year, and their decisions will be very much depending on the CPI result tonight. Okay? Not only on the quantum, but if you actually take a look at the speed, okay, how not only how much, but also how fast US has increased their interest rate. As you can see, even a couple months ago, okay, 2022, the curve is actually the steepest in terms of interest rate hike. What we are witnessing now in US history, this is the fastest US has increased the interest rate in the shortest period of time. You can see the steep curve is almost up to 90 degrees. Okay, so how resilient the market is towards this sharp increase in interest rate is remain to be seen, but a lot of people are feeling the heat. Okay, so when the Federal Chairman Jerome Powell said that we actually have some ways to go, and the ultimate level of the terminal rate, the final estimated rate, is going to be higher than previously expected. So in summary, what they say last week is that no, we are not seeing inflation to come down. And in fact, we are continue to going to increase the interest rate aggressively, and the ultimate target rate will be higher than what we anticipated a couple months ago. Bad news for business, bad news for stock market, bad news for crypto market. Okay? So we talk about tonight, 9:30, the consumer price index. Consumer price index basically is the index to tell you how is inflation is doing. Whether inflation is high or low or medium is basically looking at number. The number is normally reflected by the CPI, the consumer price index. So estimated CPI compared to last month, October, they're expecting the CPI to increase by 0.6% on month-to-month basis compared to last month. The core rate of inflation, normally they will exclude energy and food because these are the two volatile, okay, is also expected to rise 0.5%. So anything below that, in general, would be a better news for market. Okay, it means that no, the Fed may look into that and say inflation might have come down. Probably I will not increase so much interest rate. That's what the market is hoping. But compared to last year, I mean, you can see here on annualized basis, the CPI forecast is for 8% compared to October last year. Okay, these are the result. This is the not the result. This is actually the expectation. So anything above will be bad for stock market and the whole. Anything below, hopefully, there is actually a hope for slower pace of interest rate hike. Now, inflation is one thing to look at, but also at the time is unemployment rate. The labor force is another major things the Federal Reserve will look at before they are determining their interest rate. So the labor data last week was actually a bit of contradictory. But moving forward to the technology world, the two major big news that actually shocked the market was by Twitter after the world richest man, Elon Musk, took over Twitter and he slashed almost 50% of the workforce, saying there's a massive drop in revenue. Half of Twitter's staff are being laid off. And not only that, Facebook, by the name of Meta now, okay, is also laying off more than 11,000 employees. This constitute about 13% of their uh, total workforce. So this has never experienced this big scale of layoff in Facebook history. And no, the owner of Facebook, okay, has actually admitted betting on Meta, the universe, the platform, has actually increased the cost, and also he cited a drop of revenue on their advertisement. So by looking at the two major company, Twitter's and Meta, laying off their workforce, is also another things, uh, perhaps is another indication of what the labor market is going to be in US. And hopefully Federal Reserve, the central bank of US, would take note of that as well. Okay, so we're talking about China, the UK change of prime minister, and also what happened in the interest rate in US, and what to move forward, what to look forward tonight, and also the labor market, especially the technology part. Now we are moving back to Malaysia. So next Saturday, I think everyone is aware we are going to have our 15th general election. And in Malaysian history, there's never in Malaysian history there's so many candidates contesting in Malaysia general election. Okay, even the Batu seats are seeing 10 corner fights. I think one thing there are so many people stand coming out to contest. The major reason is there's so no clear winner among the different parties. Okay, now you have BN, you have PN, we also have Pakatan Harapan, and even individual contestants are having hope that there is a greater chance ever compared to before. They might win a seat when people are cannot choose, or the vote are being split among so many parties. Okay, so some of the news already know that Malaysian anti-party hopping law. Okay, you can no longer jump as a frog after you win the seat if you contest under a party flag. Okay, this already in. So we won't be seeing individual jumping from party A to party B, because the seat will be vacant, they will need to do a re-election. Okay? This is to prevent the chaos, the instability in Malaysia political scene. But at the moment, okay, the three biggest contestants, the three party, but at the moment, some analysts would also be seeing there could be a multi-coalition government may return to post. So analysts are seeing there may not be one party holding enough majority to form a government to rule by themselves. So we might not see individual, but we might be seeing different party platform to discuss, to form an alliance, to form the government. There will be a negotiation on a different party instead of individual after GE15. So just another 10 days to go, 9 days to go, in fact. So let's wait for the result, and hopefully Malaysia can move forward with a peaceful, smooth general election, and we can have a stable government to look forward to. With this, I conclude my sharing for today, and thank you. See you 9:30 tonight, and hopefully you can get some updates on the CPI from US. Okay, I'm Sean here. See you all. Bye.